Hi there, welcome to Kneppy Invest and welcome to March 13, 2025. We have about 20 minutes left of trading today, and unless we see a lot of buying in our market, I'm going to call today a really disappointing day of trading on the ASX. And the reason I would consider it to be a disappointing day is because I fully expected us to be in the green. And the main reason, even though Dow Jones Industrial was down, NASDAQ had a good day. We had good CPI numbers come out of the United States, better than expected. And our futures this morning were hinting at a pretty good day. Now, just because the futures hint at a pretty good day, that just is discussing or talking about the start of the day. And we were up in the first 2 to 3 hours of trading. And then for some reason, we've just seen this selling, a wave of selling coming in. And we have seen our market dive during the day. In fact, from the peak to the bottom, probably a 1% decrease. Yeah, maybe a 1% decrease. Small caps are up, but tech's down as well, which is interesting because NASDAQ had a pretty good day and also mining down. So the agenda for today's video, we'll go through the ASX today. We'll have a look at the best and worst performing sectors, indices, and also companies. Top 5 stocks of the day after that, struggling to come up with top 5 stocks. So I have cheated just a little bit. And one of the companies in the top 5 is not a company at all or a stock. It's a group of companies that are digging a commodity out of the ground. And I won't say what commodity that is, but one of the companies went ex-dividend today, and the share price of that company is down 12%, mostly because they went ex-dividend. And also I should mention, one of the other companies in the top 5 stocks is a company listed on the NASDAQ, a Chinese company. And I'd never heard of this company before. Share price has been an absolute tear. This company has a market cap of about $20 billion. And they released something in regards to flying cars and robots. And if any company releases any sort of announcement like that, I'm going to pay attention. So that company is in the top 5 stocks of the day. And then after the top 5, we'll have a look at some of your comments, including a rebuttal from, I won't say Maga, but Trumper, who believes and sort of demolished me for taking in the spin. And this person believes that tariffs are just being used by Trump as a negotiating tactic. So I do have a reply to that. And in fact, I probably would have believed that just 1 month ago, but I'm not sure if I believe that anymore. Anyway, so that's towards the end of the video. Okay, so let's have a look at the ASX today. And I'll just refresh this because I'm not sure if this refreshes it on its own. No, it doesn't, I'm pretty sure. And a disappointing day. What can you say? Futures were up, an okay day on Wall Street, maybe not the Dow Jones, but definitely NASDAQ. And I fully expected a pretty good day. We are oversold. Our indices are oversold. If you go to the XJO and just put in RSI, I think it's been oversold for a while. And let me just confirm that. Yeah, it's actually wildly oversold right now. Maybe wildly is not the right term, but it is significantly oversold. And when something is significantly oversold, you expect a bit of a bounce. And because we're not getting that bounce right now, that's a little bit concerning. And it probably shows there's a lot of negative sentiment out there. Lots and lots of negative sentiment out there. Anyway, it's just prime. I think the SGO and a lot of our other indices are just prime for a bit of a bounce. And I fully expect that bounce. I'm not sure when it's going to be. Okay, so let's go back to the market. Now, today was a little bit interesting and intriguing because we were up, well, I shouldn't say we, our indices were up. In fact, they were rising during the first hour and 15 minutes of trading. And our indices, and when I say indices again, I'm talking about the All Ords, XJO, and the XTX, which is your deck, they did reach their peak at about 11:15. And ever since then, down she goes. On like a water slide. Maybe not a really steep water slide, but definitely we have seen a little bit of weakness in our indices during today. Not sure what has caused that weakness. Maybe American futures are down. Maybe some bad economic news out of Asia. Although I did have a look at trading economics and nothing significantly in here. In fact, Japanese shares rally on US inflation relief. That didn't happen with us. Brazil inflation rises to 17-month high. Maybe that's what's caused it. I don't think so. Anyway, so not sure what has caused our market to fall. Again, it could just be negative sentiment. And yeah, that's all it is. When we have a look at the different sectors, IT up a little bit, not surprising because honestly, NASDAQ was up over 1%. So we should have seen a little bit of strength in some of our IT companies. Real estate is up as well by a little bit. Gloomer Group, which is the biggest, by far the biggest company within the real estate sector, that had an okay day last time I looked, but a pretty negative day for quite a few sectors, including energy, financials, discretionary staples, all down by more than 0.5%. A pretty bad day again for the banks. Now, CBA remains widely overvalued, even though the share price is dropping. Some of the other banks may be heading towards more fair value. I haven't had a close look at them for a while, but because the price of these banks are falling, I would say and maybe argue they're heading towards fair value, particularly ANZ. In fact, let's do that right now. I'm going to have a close look at ANZ. I just want to see what the P/E ratio is. Now, I typically look at P/E ratios and price to book, and we don't have price to book in Trading View, but we do have P/E ratio, and it's 14. Okay, so it's not to the point where I would be giddy with excitement that it's good value, but the more it falls, the better it looks. Anyway, that's ANZ. I just want to get rid of RSI. So ANZ is not oversold, by the way. And it's still, we can see it's not below the most recent low, which was in December. So it's actually not, I'd say the ANZ chart just looks like it's just going sideways and not really in a significant downtrend as we speak. Well, as I speak, because you're not speaking. Well, you could be speaking, but I wouldn't know. Okay, so let's go back to our market indices. ASX 20, the worst performing, down 0.7%, which is really interesting because we have seen a fair bit of weakness in the ASX 20. So a lot of people, I suppose, and I assume in these sort of times, a lot of investors would sort of rotate out of more risky assets into the safer assets. And I would assume the ASX 20 would be considered safer assets. So the very fact that there's been a lot of weakness in the ASX 20 is a little bit of concern. So if in the last week, the ASX 20 is down 5.2%, in the last month down almost 10%. In fact, one of the worst performing indices, in fact, has performed better than the banks, but not, and the All Technology Index, but you would have expected maybe a little bit more strength in the ASX 20. And I think one of the reasons why it's down a lot is because of the banks, because banks may make up a significant proportion of the ASX 20. So at least 5 out of 20. What's that? 20%. No, yeah, that's 25%. 5 divided by 20 is 25%. So the banks make up 25% of the ASX 20. So let's just click on the XTL. And let's have a look at today. What's happened today? 6 companies are up, 14 down. And the 6 companies up include Goodman Group, which is why real estate's had a good day. Brambles, Telstra. Someone did mention Telstra in the comments that this is dog with fleas, but every dog with fleas has a wash on now and again, and they no longer have fleas for a while. And I think Telstra is going through this little period where it actually does look good. Definitely not a long-term hold. WiseTech's had a good day, understandable because it's tech, and Woodside and Transurban up slightly. Worst performing companies in the ASX 20 include REA Group, Westpac, BHP. So BHP, Rio Tinto, and Fortescue had a bad day. So obviously iron ore had a pretty negative day. By the way, gold's had a really good day. Something I did not mention before. Gold's had a really good day. There it is, gold up 3.34%. Yep, 3.34%. Now is the time to be into gold, it seems like. Okay, so let's turn our attention to the best and worst performing companies on the ASX. I don't think we're going to find much here, just because when it comes to announcements, today was quite boring. I'm going to be absolutely blunt. Nothing much happened today. That's why I had lots of struggle coming up with the top 5 stocks of the day. Wide Open Agriculture, they released something interesting the other day. I completely forget. Something to do with protein. They're up another 81% today. Now, I don't remember this company released anything today. I could be wrong. I think this could be just... No, there it is. Securities new sales in Europe, Latin America, and Australia. This is just, I think this has become a plaything for day traders. It looks good. The chart looked okay. when I did or mentioned this company last time. And oh yeah, this chart, yeah. So we've had two significant rises in this company based on the back of some good announcements. And then when they did release the most recent news on the 10th of March, share price in subsequent days just went sideways a little bit. And then we've had another rise today. I think this is just some really good positive momentum in the chart, and day traders are interested in this company. So no news from wide open agriculture. In fact, you can see here, it's up 81% on market index, but on ComSec, which is up to date, it's only up 62%. So we have seen a little bit of selling within the last 20 minutes. It's gone from 2.9 to 2.6 cents. Energy Transition Minerals, ETM, up 22.5%. This company did receive a price query. So again, just noise. Here we go. Response to ASX price query. I do on occasion look at these. Maybe these sort of companies not so, because mining exploring don't have as much interest. They answered no. So that means they've given a pretty good answer to 3. There's one about Greenland here. This could be more interesting than I'm letting on. They're talking about Greenland. The results of the parliamentary elections in Greenland, held on the 11th of March, have been widely reported in the media. Greenland's centre-right opposition party, the Democratic Party, secured the largest number of votes, 29.9%, followed by the Nalaruk Party and the Inuit. I'm not going to even try to pronounce the word after Inuit. ATAQATIGIIT. Antarctic. Okay. The outcome is understood to be likely. The outcome is understood to be likely to lead to the formation of a new coalition government. Pro-business agenda. Go Greenland! Unbelievable that a Greenland election can lead to the share price of a company rising by 22%, but that's what they are thinking. So obviously they have projects in Greenland. Greenland is a really hard place to mine. This is something I've learned over the last few months. It is a hard place to mine, really expensive, and a lot of companies have tried to go to Greenland and mine, and it hasn't really worked out. So let's have a look at the chart for ETM, Energy Transition Minerals. Is this a chart to like? It's not bad. The share price started to rise once, Trump was starting to spout his, we're going to take over Greenland, we're going to buy Greenland. I wonder if that's why the share price was rising here. So not a bad looking chart for Energy Transition Minerals. And I'll be honest with you, I don't think there's anything else going to be here. In fact, if you have a look at the market cap, very small companies, the largest company in this list is Hutchison Telecommunications, market cap 339 million. But typically there is really low volume for that company. So whenever I see that company on the best or worst performing list, I just ignore it. Okay, so let's have a look at the top gainers by market cap. Hopefully there's some more interesting companies here. Westgold, up 7.8. I didn't see this company release anything. I might have missed it, but let's have a look. Change of director's interest notice. Did director buy some shares? Sometimes that's all it takes. Sometimes that can be all it takes. Acquired 10,000 shares at $2.48. It's not a lot. Was that on market? Yep, on market trade. Maybe that's all it is. Some Westgold guy bought some shares, and the market went, ooh, that can be a good sign. And I'll be honest with you, it's a much better sign, more powerful sign than insiders selling. Yeah, insiders buying is a much more powerful sign than insiders selling. Research has been done on this. I looked at this research many, many years ago. So buying is much better indicator for future success of a company than selling. The chart, by the way, doesn't look that crash hot. But you know what does look crash hot? Their chart, Banda. It's in my top 5 stocks of the day. In fact, if I was doing a stock of the day, Banda would have been number 1. Drone Shield, a good day. Robotics, nothing much to talk about here. So we can move on to the top losers. And I don't think there's going to be much here. Oh, Silk Logistics. I will talk about Silk Logistics in my top 5. Share price down 22%. And otherwise, look at the volume. The turnover is so low. So these are all small companies. As we go down further the list, Pioneer Credit down 13%. This was a company I was trading And then I decided to get out because the chart was starting to look a little bit negative. And I think there might be some value in this company, but the chart was starting to look pretty bad. You can just see it. Nice upward momentum in the share price, and the share price started to drop. So I got out a few weeks ago. So I got out probably, at about, the end of February. And that was a good call. I'll give myself, some credence, not credence. I'll give myself, pound the back for that one. And what was the other one? Oh, Yancoal. Yancoal is a coal company, and they went ex-dividend, and they have a pretty nice dividend. I think it was 8% yield, 9% yield. So that's understandable why the share price is down. Okay, and let's have a look at top losers by market cap. Coal, coal, coal. There's a reason why coal is in my top 5 stocks of the day. Not sure if I mentioned that earlier. I think I did mention it. There's a commodity, but I don't think I mentioned it's coal. Well, I've given it away. Yancoal, Whitehaven, and New Hope all down pretty significantly. Now, Yancoal did go ex-dividend, but there's other news when it comes to coal. Other companies in this list include Macmillan Shakespeare. There's Coronado, which is another coal company, down 5%. XRF, that could be getting interesting. So this is one company I am trading. Is it getting towards the sell price? Oh, not quite. Oh, because I had a really good day yesterday. So it's not quite, it's actually nowhere near my sell point yet. Step One Clothing, Michael Hill, nothing else to talk about here, I think. Okay, so let's talk about the top 5 stocks of the day. And coming in at number 5, we have coal. We have coal coming in. I did get a little bit of news from Capital Brief. Here it is, coal stocks sink on lower Asian imports, Macquarie outlook. So there was some data that Asian imports of coal sort of, I wouldn't say decreasing, but a bit of a weakness in Asian imports of coal. And then also Macquarie cut its coal price forecast due to softer demand. So, and modest supply growth from Russia and Mongolia. So it all comes back to demand and supply. And this is an absolute truth for all commodities. It's why I would never ever consider commodity companies or mining companies to be high quality, because their performance, financial performance, is driven by the demand and supply of the underlying commodity. And they have no control over that. Absolutely zero control. Mostly, I'd say, because, demand supply, it's a worldwide thing. And that's why commodities and mining companies go in cycles. And again, another reason why it's not a company you should own for the long term. The only company I might consider owning for the long term would be BHP. It is the biggest mining company in the world. And over time, I think the price of BHP will rise. But even then, we have seen in the past significant weakness in BHP's share price because of iron ore. Now, they are diversifying. In fact, I think they consider copper to be the more important commodity they are mining right now than iron ore. And the one of the reasons I say that is because whenever you see a BHP announcement, they put copper before iron ore. So they're sort of hinting they consider that to be more important. Anyway, so it's all back to demand supply. So if the demand of coal is decreasing, but the supply is increasing, what's that going to do to the price? It's going to lower the price. Anyway, and if the price of coal lowers, what's going to happen in the future? And if it keeps on lowering, what's going to happen? Well, some coal mines become not viable, so they close down. Maybe some other coal mines or coal miners, they decrease production. And then eventually we see the supply of coal decreasing. And if demand remains the same or even increase, so we're going to see an imbalance again, where supply is lower than demand. So then what happens? Ship price of the commodity goes up. If the price of commodity keeps on going up and up and up and up, what do other mining companies see? They see the price of coal going through the roof, and they go, "Ooh, I want a piece of that." So we start to see more and more coal exploring companies. Those who put coal mines into mothballs start producing coal again. So we start to see supply of coal increasing. And also bigger coal companies like Yancoal, New Hope, or Whitehaven might start to increase their coal production as well. So we start to see the rise of supply of coal. And then, because you might even have more coal companies starting mining production, supply could go to really elevated levels. And if demand doesn't increase with that, so eventually you're going to see supply significantly greater than demand. And then what happens? Coal prices start dropping. It happens time and time again. Anyway, so it's cyclical. And right now, it looks like coal prices are heading down because increasing supply, decreasing demand. Anyway, by the way, I do have coal in my watch list here. Where is it? Here it is. And this is, so it's funny, just prior to this, in the last week or so, we did see coal prices rallying, and now we've seen them dropping. But yeah, just have a look at this chart. Coal prices are on the nose. They've been on the nose for about 3 months. And because of that, we've seen a significant drop in the price of all coal companies on the ASX. Now, Yancoal did go ex-dividend, and I'm pretty sure that dividend was, it was an 8% dividend yield. I'm going to say 55 cents. See how close I am. See how good my memory is. 55 cents, 52 cents. So that's not that good. Okay, so 52 cents. Share price is down 78 cents, which is understandable. A lot of investors might be in Yancoal just for the income, and because they've received their income today, well, not today, but it's gone ex-dividend, they're probably just selling. And I don't care if they sell at a greater price than the dividend receiving, which is nuts to me, but they're just selling because they're getting the dividend from Yancoal. So share price of Yancoal down 13% because overall weakness in coal, and also they went ex-dividend. By the way, I'm just going to have a look at the charts for these now. And you can adjust charts like Yancoal to take into account the dividend. It's ADJ right there, and hopefully it's adjusted. It hasn't adjusted it. Sometimes it adjusts the chart on the day. Sometimes it doesn't, I've noticed. Anyway, back onto some of the other charts for coal companies. Whitehaven Coal. Why did that do that? Whitehaven Coal. Yeah, it's in a downtrend. Hopefully you can understand why this is in a downtrend. And New Hope, I don't think this one's in a downtrend. It had been going sideways. Oh no, I am wrong. Had been going sideways. So you can see how long ago I looked at this chart. So I remember New Hope share price or chart going sideways, and it started to really drop back towards the middle of February. And it's fallen a fair bit in a fairly short period of time. And also, the share price has fallen below a really important support level. So about there it is, about $4. Yeah, about $4 is an important level for this company. So this is actually looking really negative for New Hope. And I'm wondering if Soul Pattinson share price is dropping as well, because they're a large shareholder of New Hope. Yeah, look at that. Look at Washington Wholesale. Look at that. That's probably because of coal. Maybe not completely. But it's interesting the share price did not drop today. Anyway, it's all connected. Well, it's not all connected. There's definitely a connection between Washington H. Soul Pattinson and New Hope, because Washington H. Soul Pattinson owns a lot of New Hope. Anyway, so let's go back to top 5 stocks of the day. By the way, this article, is the ASX 200 about to crash? Lessons learned from 50 years of stock market crashes and calamities. I said there will be an exam on this. Well, I've delayed that exam because I forgot to read it myself. And I will have remedied that by tonight. Absolutely, because I actually bookmarked this, and I actually do go through my bookmarks in terms of reading stuff. Anyway, so let's go back to the top 5 stocks of the day. Coming in number 4, we have a company I'd never heard of before. In fact, I'll go have a look at the chart. Xpeng. Ticker code is XPEV. Sounds Chinese, doesn't it? The chart looks pretty good. This is the chart for Xpeng. By the way, the market cap of this company is, 23.73 billion. I saw a mention of this company in an email I did receive, and that email was enough for me to become a little bit more interested in Xpeng. And this is the article, or one of the articles you can read. XPEV, which designs, develops, manufactures, and markets smart electric vehicles in China, is preparing to mass produce flying cars and humanoid robots by next year. The company looks at humanoid robots as a long-term project and is considering significant investments of up to $1 well, I was going to say $100 billion, of $13.8 billion. The initial investment in this sector has been relatively conservative, given that it's still in its early stage. However, the company is prepared to allocate much larger funds. Having spent 5 years in humanoid robotics, Xpeng anticipates remaining in the industry for the next 2 decades. In November, XPEV unveiled its first humanoid robot named Iron. In fact, I haven't Googled this yet. I just want to see how it looks like. Oh, I actually have seen this. I have seen this, yeah. Images. Yeah, I actually have seen this. Yeah, I have seen this. Yeah. Of course, I've seen this. I didn't realize it was this company who was doing this. Really impressive of what I've seen. And we'll go back to this article if I can find it. Here it is. Marking a major step in robotics. Then they keep on going on. The interesting thought I was here was about flying cars. So we all watched Jetson, didn't we? Flying cars were supposed to be the future. Well, where the hell are flying cars? Anyway, Xpeng's flying car to revolutionize aerial mobility. The company's making strides in aerial mobility with its Aero HT flying car, also known as Land Aircraft Carrier. The vehicle features a modular design integrating a detachable air module within a ground vehicle. This allows the air module to autonomously separate for vertical takeoff and later reconnect seamlessly upon landing. I'm not sure about this. I'm still really skeptical about flying cars, but still, it's just interesting and intriguing for me. In fact, let's Google this one as well. Australia's first flying car now on sale. There you go. Anyway, images. Yeah, there we go. There's some images about flying cars. Yeah, I'm still a little bit skeptical about flying cars, but in saying that, definitely think robotics or robots, that sort of thing, is going to be a massive market within 10 years. Huge market within 10 years. Who doesn't want a butler? Who doesn't want a robot to do all the work for them? Hands up. No. I said who doesn't? Who does? Me. Anyway, so I think there's a lot of promise in robotics and robots. Not sure about flying cars. But this company was interesting or intriguing enough for me to have a look today. And I was thinking, oh, maybe I should take a position in the company. But then I saw the chart and went, oh, the market's already aware of this company. Share price has really taken off. I'll put this on my watch list. And if I see the share price pull back significantly, by the way, this company has a lot of revenue already. What was it? It was, in fact, what we can do with Xpeng, because I'm in no rush, we can do what I always do and have a look at FinChat. So this company has a lot of revenue, but is nowhere near being profitable because they must spend a lot of money on a lot of their cash flow. In their normal business, they spend all that on research and development, that sort of thing. So Xpeng, I thought it was NASDAQ, but it's New York Stock Exchange. There you go. Financials, so revenue. So a really nice increase in revenue from nothing in 2018. That's not true. 9.7, is that million? Does it say doesn't say, oh, it's in million, yeah. So 9.7 million in 2018 up to $37.8 billion in the last year. So really nice increase in revenue. I wish I knew about this company before, but again, the company is not profitable. In fact, if you have a look at the earnings or the profit, it's only loss-making. $5.8 billion loss in the last year. Cash flow, I always like to have a look at cash flow because they could be cash flow positive, but they're not. Actually, they were. They were operating cash flow positive in the last year by $956 million. Anyway, that's what I'm going to talk about when it comes to Xpeng. It's just a fairly boring day on the ASX when it comes to announcements, and I just had a look at this company this morning for the very first time. Coming in number 3, we have Jervois Global. Share price 1.1%. You see, or 1.1 cent, not percent. You'll see no trading today. In fact, the company went into a trading hold, I think, late last year. This company's gone into a voluntary administration. I'm pretty sure they're a cobalt producer, and for some reason, I'm thinking cobalt producer in Norway, or maybe it's Sweden or Finland, something like that. The share price of this company not that long ago was like, was it $2? Maybe $1, maybe 90 cents, something really high. And because of weakness in the cobalt sector, share price of this company has dropped from 90 cents all the way down to 1.1 cents, and they've gone into voluntary administration. Confirmation of Chapter 11 plan. The company went into trading halt. Here we go. Commences Chapter 11 recapitalization procedures. They went in trading halt. Let's have a look. So it must have been the 2nd of January. We can have a look at the most recent cash flow. I'm pretty sure this company is a producer. Yeah, they are a producer, yeah. So they produced 1.3 metric tons of cobalt in the quarter. But if you have a look at their cash flow statement, $38 million in receipts, but we're operating cash flow negative by $11.7 million. So in fact, if you look at the receipts, 38 million, just production costs, 37 million. So they're barely viable. I'm not sure why they didn't just shut down all their mining. And the other thing to look at is the debt. A lot of debt. Heaps and heaps of debt, $184 million of debt. So this is not a surprise. This is definitely not a company I would have been even thinking about taking a position in. But a lot of people did. A lot of people were shareholders of this company, unfortunately. And if you just have a look at the chart for, by the way, do they have where they mine? And that looks like Portugal or Brazil. I'm going to say Portugal, Brazil. So they have a nickel and cobalt refinery in Brazil. They have cobalt operations in the United States. Finland, Jervois, Finland. That's it, Jervois, Finland. There it is. Yeah, I knew it was somewhere up there in those Scandinavian countries. I was thinking Norway, but yeah, Finland. Anyway, so let's have a look at the chart. And the chart of Jervois, if I'm pronouncing it right, is a tale of warning. This is a chart of a company that you should not be holding at all. Share price did reach a high in 90 cents, 95 cents back in April 2022. So it's fallen from 95 cents to 1.1 cent. And you had a lot of time to get out if you were holding this. And share price just kept on falling. I think at certain points when the share price has dropped a lot, people just, or shareholders just go, well, what's the point? It's already dropped a lot. Might as well just keep on holding. But he could have sold at like 20 cents. You would have been down 80%, but still, you still have gotten something out of it. Anyway, so this is sort of an instance where you can see how technical analysis can help. There's no reason to be holding this company just by looking at the chart. And to be honest with you, there's been no reason to buy on a technical basis. There's been no buy signal at all. Share price just keeps on dropping. Okay, so that's Jervois. And let's go into company coming in number 2. Now, with Jervois, I've talked about why there's no reason to be holding that company. Now, Silk Logistics share price down 22%. There was a takeover bid for this company. And my philosophy on takeover bids is when you see a takeover bid for a company you own, sell. You might say, well, there could be a bidding war for the company. I don't care because historically, and I wish there was some research done on this, historically, the chances of a bidding war are much lower than the chances of the acquisition or the takeover bid failing. And I've seen this time and time again. On occasion, you will see a bidding war, but I don't really care. I'm just protecting my capital. And this is a case where people who did not sell because there was a takeover bid, or people who bought in for some reason on the takeover bid, have seen their capital drop 22% because of ACCC concerns that this will lead to a decrease in competition. So here we go. World Australia's acquisition of Silk raises concerns, and this was about competition, decreasing competition. ACCC says it somewhere here. Here we go. The 5th paragraph down. We have heard concerns that DP World's ownership of a national container transport provider is likely to reduce competition in the supply of container transport services. This could lead to higher prices and reduced quality for Australian importers and exporters. There you go. So doesn't mean this takeover bid is over, but there's a reason why the share price is down 22%. So let's have a look at the chart for Silk Logistics. And this is a case where I just don't understand why people buy when there's a takeover bid. So you can see when the takeover bid happened. It happened on the 11th of November, and the share price on that day rose 40%, and the share price just went sideways. I'm not sure why. There's a little bit of a discount, and so are you willing to get that little bit of a discount if this takeover bid is successful, compared to the risk of the share price just collapsing if the ACCC has concerns? And in fact, look what happened to the share price before this. The share price started to drop. So there must have been rumors out there. I'm not sure if Silk Logistics mentioned it. There was a scheme being postponed. There must have been concerns just by looking at this chart. Share price going sideways is what you expect, and the share price started to drop. And the share price is dropping towards where the share price was before the acquisition, which tells us the market doesn't think this acquisition is going to go through. And that is a problem when you hold on to shares when there's a takeover bid for a company you own. This could happen. And that is why I sell. I completely sell out when there's a takeover bid. Too often we have seen these fail. I'm going to go back to Appen, a company. There was a takeover bid for Appen. And when was this? When was this? Here it is. Here it is. There was a takeover bid for Appen on the 26th of May 2022. I do remember this because it was pulled the next day. You could have sold on that day, 26th of May 2022, at an increase in share price the day before of 29%. And you'll probably be fairly happy because the next day share price dropped 20.9% because the takeover bid was pulled. So my thinking now, because of this, is whenever there is a takeover bid for a company I own, sell almost immediately. Sell, take your profits, go find a trade or another company you want to own for the long term. Anyway, so that's Silk Logistics coming in at number 2. Coming in number 1, we have a good fill story. Banda mining, share price up 10%, no, 9.95%. And they released outstanding exploration results at Little Gem. What if they would name this, instead of Little Gem, Awesome Gem or something like that, Big Gem. Anyway, Little Gem, I'll be honest with you, I did not go through this announcement. It was just, well, I was going to say, it was the increase in share price of Banda up 10%. Some of that was general positive sentiment in gold itself, but not all of that rise in share price is because of that sentiment. Anyway, so I usually do struggle to fully grasp drilling results, but I do have a very slight understanding. So very important to look at how deep it is. When I say deep, the depth down, so it could be like 400 meters down. Also the drilling depth, so what the drill depth was, and am I saying that right? Like the drill hit. So is it like a 5 grams per ton over like 50 meters or 100 meters? And also the concentration grade, that's the word, grade. So 22.7 meters at 5 grams per ton, that does sound pretty good. That does sound pretty good. 10.9 meters at 6.4 grams per ton. What I've read before is that 100 meters at like 2 or 3 grams per ton is phenomenal. So 22.7 meters at 5 grams per ton, that does sound pretty good, pretty good. So I can definitely understand why the share price of Banda mining is up. Now, saying all that, I'm not a complete expert in reading these, but by my limited knowledge, that does look pretty good. So let's have a look at the chart for Banda, and this chart looks pretty good. It should look pretty good. Not all gold companies' charts do look good, but this chart should look pretty good because it's a gold company, and there is positive sentiment behind this company. So this is a nice looking gold company's chart. What can you say? Breakout for this company happened in October 2023. The share price was 10 cents. This has been a 10-bagger over the past 16 months. Oh, I wish I bought on this breakout. The true breakout really happened a little bit after that at a share price of about 17 cents in November. That was a true breakout. And there's actually been, since then, there's been no reason to sell. Okay, so that's the stocks of the day. Banda coming in at number 1, share price up 10%. Now onto a few announcements or a few comments. Ayaz Rahman just says, how do you decide on setting the sell price? I've seen you set it above and sometimes below your purchase price. Yes, because I do adjust the sell price based off the share price going up. Well, I only adjust the share price if the share price goes up. So let's have a look at a few examples. So let's have a look. So what's a good example here? Shape. Yeah, why not Shape? So right now I have my sell price for Shape at $2.50. I'm giving a little bit of leeway because I bought $1.86. In fact, let me just readjust this because it looks weird. So I have readjusted for dividends. So in the meantime, with Shape, I have received 2 pretty good dividends. So share price has rallied from $1.86 to $2.99. I've got my sell at $2.50. The reason I've got my sell price at $2.50 is because that has been support level. Now, if the share price keeps on rising, I will lift this sell price. So I could lift it. In fact, I could lift it to there, because that was a low like a couple of weeks ago. I might want to give it a little bit more leeway to run. So I might put it right there. I'll put it right there. So I'll give it a little bit of leeway, but if the share price falls below that orange line, I will sell. So I continually look at these charts and then I raise the sell price if I see anything to raise it. Now, some of this could be, a lot of traders would use specific rules to put in their sell price. They might use stop losses. I don't use stop losses. I don't put it into the system or the platform I'm trading with. I just look at these charts every day and I just look at where the share price is. And a good example is Cube Holdings. So I bought Cube at $3.52 in May of last year. The chart looked pretty good. Share price fell below this orange line and I decided to sell it. Simple as that. Stick to your rules. Stick to your rules. So a nice little profit, like a 6% profit with Cube Holdings. And that's what I do with all my charts. And with Cube Holdings, I probably raised this orange line 2 or 3 times over the past 6 or 7 months. A most recent holding would be Collins Food. I've just taken a position in Collins Food and I've put my sell price at $7.90 or $7.90. So a little bit of leeway. And if the share price does fall below $7.90 for a brief period, I won't care. So what I'll do with this one is I'll, just watch how the share price goes over the next few weeks, next few months. If share price starts to go up, I'll raise this. I'll keep on raising it. Keep on raising it. Anyway, so hopefully I've answered your question. So with Collins Food, the sell price is below what price I bought, but for Shape, it's well above the price I bought because I keep moving my sell prices. I don't have price targets. At all. I don't say with Shape, I have a price target of 325. No, I want to ride my winners as much as possible. Just keep on riding on the bull train. And then if a share price of a company drops below, if a trade goes against me, sell out of that trade, even if it's at a loss. I don't mind losing 5%. I'm protecting my capital. So with Collins Food, that would be a loss of maybe 6 or 7%. I don't mind taking a loss because then I can redeploy that capital at a later time for a winning trade. So sell your losses. When a trade goes against you, sell it at a small loss and then ride your winners as long as possible. That's how you make a lot of money. You don't make a lot of money by maintaining holdings in your losses. You're losing companies and then selling all your winners. Eventually, you're just going to have a portfolio of companies that are going down and are losing you money. So hopefully I've made myself clear. That's my philosophy. Anyway, there was another question about this. There we go. Just James Dean says, Telstra is a cat with fleas. But again, I thought he said dog with fleas. But again, on occasion, a cat with fleas might lose all their fleas. So Telstra right now isn't that bad for the short term. Capital Seth says, when you say you're selling your portfolio to get into cash, are you also liquidating your losses? Well, yes, some of my losses, some of my companies that are, again, yes. I'm not selling all my portfolio, just the ones that go below the price that I have as a sell target. Sell price. Where's that comment about... What about this one from Pojki? Hey, Kneppy, what do you reckon of companies like ResMed who have posted good results but are still high PE? in a more fickle and skittish market, I was thinking it would be a good opportunity to load up on some high quality shares. So I did sell half of my ResMed, but the reason I sold half of my ResMed is because I bought it ResMed initially. We'll go to ResMed chart. I originally bought ResMed on that overreaction of the market in regards to Ozempic. When was that? There we go. September 2023. Remember, the market overreacted in regards to the effect of Ozempic on ResMed. It created an absolutely amazing opportunity to buy this company at really good value. So I decided at that point in time, instead of just buying a long-term holding position, I'd buy a long-term holding position and a trading position. And I held on to that trading position all the way up to the last week or so. And then I sold out of my trading position, but I'm maintaining a long-term position. So that's my history with ResMed. Let's go back to the question. What was it again? Good opportunity to load up on some high quality shares. So the problem with, in these times, companies with a really high PE ratio, they will be sold off quite significantly. So it all comes back to whether you think this sell-off in the market is going to continue. I would not be surprised if, say, a company like Pro Medicus drops 50% from here if we do see a sell-off in the market. So it's only dropped a fair bit from its highs. In fact, Pro Medicus has dropped. Pro Medicus has dropped from its highs, has dropped over 25%. I wouldn't be surprised if this drops even more because it is perceived to be overvalued, and these overvalued growth companies can sell off a fair bit in these sort of times. So you have to also keep that in mind. If a company like ResMed is, in your opinion, overvalued, it could, or has a high PE, maybe not overvalued, but it has a high PE, there could be further selling off. But it could also be an opportunity to buy. So what I did in 2022 is I wanted to buy American companies. So this is going back a long time. So a lot of those high quality companies. And when I saw those companies reach a buy point, maybe a good valuation, I bought some shares. Now, since then, I've discovered that some investors just look at the 200-week moving average. And this is just from Charlie Munger. And they just figured out that if the share price gets a 200-week moving average, it's a good time to buy these high-quality companies. For instance, with ResMed, the only time the share price has dropped below the 200-week moving average since 2011 was during that Ozempic scare. That was a great time to buy. And right now, the share price of ResMed is about $5 above the 200-week moving average. So that's another 20% downside, by the way. So there is potential the share price could drop a fair bit more for ResMed. Hasn't dropped all that much, by the way. It's only gone from $40 down to $35. Yeah, it's not that much. And finally, where's that? Okay, so I found the comment from Volk Shop. And what I'll do is I'll go through this comment and then I'll reply to it. So I'll go straight through it and then I'll reply to each little part in it. Hopefully this reply doesn't go on too long. Okay, so obviously Volk Shop is a Trump supporter and Volk Shop believes that Trump is using tariffs as a negotiating tactic. And I'll be honest with you, I thought along those lines not that long ago. Definitely not a Trump supporter, and I'll talk about why in a second. Okay, so here is the comment. Clearly you're not thinking about the larger strategy. You are coming across as a never Trumper. Do you really believe that the entire White House has no idea about how tariffs work? Come on, mate, don't lap up the spin. The Trump administration knows exactly what they are doing. All this noise and tariffs are to extract new negotiations on existing USA trade deals or peace deals. This has nothing to do about tariffs and everything to do about geopolitical positioning. Are you focusing on the noise? All I'm saying, Kneppy, there's more to this than just tariffs, and blaming Trump is just old hat. Well, there's no one else to blame, by the way. Anyway, so let's break this down. Clearly, you're not thinking about the larger strategy. What is the larger strategy? Okay, so you might say to get better trade deals, that sort of thing, but there's a lot of questions about that because they're losing this trade war at this point in time, particularly when it comes to Canada. You are coming across as a never Trumper. Okay, this is interesting. I'm going to talk about my political leaning right now. I do have none, or I have none. I am not leaned either way. I wouldn't consider myself left nor right. I would not consider myself aligned to Democrats or Republicans in the United States, or Labor, Liberal, Greens, one party, or anything in Australia. I would consider myself down the road, and in some sense, I'm more Republican in some things, and more Democratic in some things, more Labor leaning, more Liberal leaning in some things. But what I do, and I believe all citizens of all countries in the world, all democratic countries in the world, should focus on policies, not the party or the politician. So I focus on policies. And for instance, I will not vote for the Liberal Party in the upcoming federal election simply because of their policy or stance on working from home. In my opinion, that is a backward step when we should be moving forward. And I don't think that's going to be beneficial for this country at all. And that is one of the things I do when it comes to policies. How beneficial is it going to be for the country moving forward? So for me, it's all about policies. I could vote Liberal the next election if they had some really good policies. Now, I've been very disappointed by Labor the current regime, the current whatever you call them, because of their lack of policies, by the way. I don't think they've had any policies. They've had some policies, but nothing substantial. I'm looking for policies that can change the country for the better. Now, there's a simple reason why I could not ever support Trump. Now, there are some policies that I do think are quite good. I won't go into those. There are definitely policies that I think are terrible, and it's his stance on tariffs. That is a simple reason I could never vote for Trump. And the reason behind that is either lying or manipulating the American people, which is an awful thing to do, or he doesn't know how tariffs work. I don't know which one is worse. In fact, I do know which one is worse. If he doesn't know how tariffs work, that is by far worse. I can understand lying, manipulating people, but they are spinning this. You mentioned here, come on, mate, don't lap up the spin. They are spinning up a yarn in the White House when it comes to tariffs. They are lying and lying and lying and lying. They keep on lying. And if you tell them the truth, you are a liar. You are wrong. It's a continual spin of lies and manipulation from the White House right now. And that is why I could not support Trump at all, because of his thoughts when it comes to tariffs. When he believes that tariffs are the greatest thing on earth, what the hell are you talking about? Tariffs are a tax. You're actually saying you love taxes. You love tax hikes. So because of that, I could never, ever support Trump because of his policies when it comes to tariffs. So you're coming across as an ever-Trumper. Well, if you've had good policies, I could become a Trumper, definitely become a Trumper. It's all about the policies. His policies are crap. Do you really believe that the entire White House has no idea about how tariffs work? I'd say a lot of them do. I want to hope the vast majority know how tariffs work. But it doesn't matter if the vast majority know how tariffs work. If Trump doesn't, there's a distinct possibility that Trump does not know how tariffs work. And if one of his yes men went to Trump and said, no, Trump, you're wrong. This is how tariffs work. How do you think that's going to be handled? Do you think that person will be working for Trump anymore? Of course not. Of course not. So there is definitely a possibility that Trump does not know how tariffs work. He keeps spinning the same old lie over and over again that makes me think that he doesn't know how tariffs work. And that's a problem with spinning a lie over and over again. If you do it often enough, we believe that he doesn't believe how tariffs work. And it's just continual lies after lies. So now I'm the belief that possibly he doesn't know how tariffs work. And that is actually worse than if he actually did think tariffs or did know how tariffs work, but he was just spinning a lie. I think that is significantly worse because in my opinion, this is just my opinion, a president of the United States needs to know how tariffs work because it's the major lever they have when it comes to policies. Because back in 1930, when it comes to the Smoot or the ramifications of the disastrous Smoot-Hawley Tariff Act, the lever of tariffs was taken out of the control of Congress and into the control of the presidency. So I actually do believe there's a possibility that he knows how tariffs work, but because it's the only lever he has, oh yes, increase tariffs, decrease tariffs, increase tariffs, decrease tariffs, that he's using that. That's a possibility as well. Anyway, so do you really believe that the entire White House has no idea about how tariffs work? I believe there's a possibility Trump doesn't, and a lot of the other people do, but what are they going to do? If he doesn't, they can't do anything about it. Mate, don't lap up the spin. As I mentioned, it's the White House that is spinning this. The spin wheels are mostly in the White House right now. If you don't believe that, then you do have a problem. You're believing too much in the spin that is being generated out of the White House right now. The Trump administration knows exactly what they are doing. Do they? Do they? Oh yeah. By the way, there's an article in Project Syndicate. Trump tariffs are not a negotiating tactic. Now, because you are a Trumper, you might say, well, this is just a liberal website. Of course, you're going to say that. This is slightly liberal. I would actually consider this to be middle of the road. This is a fine, this is opinions from, experts around the world. So this is, I think this is from a guy, oh, we can't read it. This is from someone who does work with the UN in regards to AI, and a really good argument from Ian Bremmer. Why Trump's tariffs are not a negotiating tactic. They were in his last cycle, not anymore. So this is a really good read if you can read it. I can register, by the way. Anyway, so have a read of that article, and I forget what I was going to talk. Oh yes, I was forgetting what I was going to talk about. Trump administration knows exactly what they are doing. Canada. One word, Canada. Canada is the example of a really good example that this administration has no idea what they're doing. No idea what they are doing. And we're starting to see this from right-wing commentators. I saw a video from Ben Shapiro saying, I understand Mexico, I understand China, but Canada, why are we doing this against Canada? Why? It doesn't make any sense. And we're starting to get this from right-wing, even ultra-right-wing commentators. Why Canada? Why Canada? So originally it was about fentanyl, but then we came to a realization that more fentanyl is going from the United States to Canada than the other way. So why? Is it because they want to become the 51st state? So what they're doing now is really damaging to the United States because this is a major trade partner with the United States. And what they're doing is turning Canadians against Americans. There is has been a significant increase in Canadian patriotism over the past month or so. Not only that, a significant increase in hatred towards the United States, particularly when it comes to Trump. We are seeing American products being taken off the shelves. We are seeing buy only Canada, or not even that, buy no American products. And this can be really significantly harmful to the American economy. So I don't know that they know what they're doing. I don't know because of Canada. It's a really weird thing to go head on in a trade war with Canada. It does not make one sense at all. You might say, well, there's a bigger picture at play here. What is it? What is it? Maybe it is they want to become 51st state, but because of that ridiculous stance from Trump, they will never become the 51st state of the United States. By the way, if they do, the end of the Republican Party, they will never win another election, by the way, because it will become the biggest state and most seats will be in Canada, and Republicans will win another election because that will be highly Democrat, by the way. So anyway, all this noise and tariffs are to extract new negations on existing USA trade deals or peace deals. Peace deals? What did Warren Buffett say? What did Warren Buffett say in regards to Warren Buffett? They're an act of war. Act of war. Tariffs, act of war. Warren Buffett rebukes Trump's tariffs plans in the CBS interview. Act of war. Trump tariffs, an act of war, warns legendary investor Warren Buffett. Warren Buffett warns Trump tariffs are an act of war. Who would I believe? Who would I consider to be more wise? Warren Buffett or Donald Trump? Well, it's not Donald Trump, it's Warren Buffett by far. And if we can see what Warren Buffett thinks of tariffs right there. They're an act of war. So I'm not sure where this peace deal is coming from. Nothing to do with peace at all. In fact, he's generating hatred in the American, in the United States. That's what he's doing, generating hatred all throughout the world when it comes to the United States. So there is a possibility this is not going to end well for the United States at all in the future, maybe 5-10 years down the road. This has nothing to do with tariff, has Everything to do with tariffs. Everything. Trump right now is losing support among his supporters because of tariffs. Because of tariffs. Nothing else. It's because of tariffs. They don't like what he's doing when it comes to tariffs. They can see, particularly business, can see how they're going to be significantly harmed in the future because of tariffs. Anyway, so it has everything to do with tariffs and everything to do about geopolitical positioning. Well, they're decreasing their geopolitical positioning. They're losing power. They're going to lose power if they continue on this road. I have without doubt they're going to lose power if they continue down this route. They could isolate themselves. And if they really isolate themselves, the power of the United States that we have considered for over a century is going to go away. Are you focusing on the noise? No, but focusing on the facts, focusing on what's happening. That's what I'm focusing on. All I'm saying, Kneppy, there's more to this than just tariffs. No, it's about tariffs. And blaming tariffs is just old hat. Well, if what he's saying is true, if he believes in it, then yeah, blaming Trump. Who else do you blame? It's Trump. This is being led by Trump. This is completely being led by Trump. So who else is to blame? No one else. The market's falling because of tariffs. The markets are falling right now because of tariffs, and that's on Trump. Okay, so that's all I have. I forgot about the sign off. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.